Hey guys, what is going on? So basically just going to do some data collection today. I thought, what a fun task to do. Might as well make a video off it as well. Um, I can go back and look at this video, see my progression and so forth. I am looking at a few pairs today. NJ, EG and US30. The yen pairs are looking actually pretty nice, but I'm going to wait till tomorrow, to be honest. I just think if I jump in a trade today, I'm not in the best of flows and I need to raise my flow state. So in order for me to do that, I'm just going to kind of take a step away and not get involved on it. I did miss this UJ position as well, which also plays a factor. I was happy with it because I was looking at the phase line break. We had more than enough. As we pushed away, yeah, there is that level of an inflection point, but we broke impulsively. So I was looking at this to come to the downside. And then we had the 1 hour retrace on it. I would have taken it with a little bit extra room for breathing. You could have squeezed it in a little bit further if you really wanted to get 30 pips there. Could I have refined that? Probably I wouldn't have found a good refinement in there, I'll be honest with you. If I go to the 5, you maybe could have got away with a 5, but anyway, I think it's a bit risky. 1 was good. And then, yeah, I would probably have personally about 3% locked in, just about here. Just in case we gravitate, hit the wick and then move back lower. It is what it is, but more than likely happy with that. And then running around about 5 now, and then with the potential for this to just fly. Probably be more aggressive because we know that we could be creating another flag soon, so another entry could shape up. But anyway, it looks really good. So that was basically it for UJ. GA as well, not much. And then this is basically it. So happy with just waiting for this. I want to see if this can kind of shape up, even if it gives me an expanding. It is what it is. If we can come back up for one more touch, free touch, I'll be happy to look for insurance entry there. EG, we are in a valuable area. We could actually just do this, which data's changed once again from the forecast where we have, this sort of ascending right now inside here, which is kind of giving me that M star. We tap into this area here, we break above, we connect the dots, we evolve with structure, we look at this as the internal. I know it looks a bit messy now because there's so much going on, but then we see this over here and the override makes sense at this point, right? Then we have the internal override. We have a 1, 2, 3 with an internal 1, 2, 3 leading into that override to then sell. So I would be sharp with that for sure. I would be very, very sharp. I would not worry so much. I look at that override line and just kind of evaluate. But more than likely, I do want to see an impulse up and push back down. But like I said, this is very corrective on the way up. The override is more than enough. It's just I don't want to be getting caught into trade, into out trade, in a trade, out trade. I'm just happy to wait for clear impulsive behavior, confirmation, and then go in with that. This 1, 2, 3 would be more than enough, and I'll be more than happy with it. So I'm going to stick to my forecast on this one and wait for that. If we do start selling from here, it is what it is. I'll just wait for the next continuation lower. So kind of jumping into things, let's go to do some data collection on, let's say, for example, CAD, and let's just go back to the weekly. And yeah, so similar conditions. I mean, let's say the last time we were in this sequence. So what I'm going to do is I'm going to pick out this bit of price here and have a look at it. So this one I'm just going to kind of just do for the kind of sake of the video. So I'm not going to document it and stuff because it would take too long. Video might go on for about 3-4 hours. So it's not really worth it. But I'm just going to look at this section here as a separate entity and then understand that. So what did I just do that for? Not back testing. Sorry, I was doing back testing before this on Euro Aussie. So I was looking at, so what I usually do is, and I'll replay that over here. I then look at, this is the sequence, kind of just look at where price was, what price tapped into, if it near missed, all of this questions that I'll ask myself as well. How did price develop? How did price get there, etc. Cool. Right. So I'd look at something like this from hindsight and be like, okay, so we have kind of this sort of 1 section, 2, 3, kind of taps into liquidity area. We had an override, we didn't respect the override, so it's fine. And then so forth. And then I can see that this is the beginning of the move. And I would look at something like this in hindsight and be like, okay, so this is the sequence I'm looking at. We understand why we're selling from here because we came in with a larger 1, 2, 3 into this liquidity area. Fine, that makes sense. I can remove these trend lines now because I'm not so much concerned with it. But what I am looking for is one thing over here. Trades clearly below here are of major interest because now we're trading back below all of this. And also there's the element of the head and shoulders, which we can already see. So it's good to understand that it's a common pattern. It's good. Then we look on the daily and see, can we see any patterns on the high time frame? Okay, yeah, instantly this works with pattern recognition. We can see we have this section over here. We have sort of this bit over here, price. We'll reanalyze this a little bit later. We can see that we have this sort of trend over here. We have this section over here. And then internally, we'll go into the smaller ones later. I'm just really more so looking at the daily to see if there's any larger structures in there. Then I'll go into the 4. And you can see I'm only analyzing this downtrend here. So primarily we're looking for shorts, but understanding that within there is counter long positions, counter short positions. Anyway, so then go into the 4 and then going to analyze. So just rein that in a little bit because we're looking for the best. We can see how price leading up to it, we did have this sort of ending structure in here. Like I said, not the best because you would have probably forecasted something like that and then looked for a tap into here. We didn't get it. We kind of just aggressively sold off. Then we can see inside price anything that kind of jumps out. We had this section over here. We had this section here. So yes, okay. This section here. And what we'll be doing after this is then we'll look at the similarities between them and kind of see if there's any sort of data we can gather. Yeah, there's nothing there at all. Still on the 4, so we can go to the one after and actually reanalyze and look at stuff. I think it would be better for me to just zoom out a little bit and just have a little look at this. You wouldn't have known that this was the massive channel anyway. Only when you saw it after it played out. You could have been looking for shorts throughout all of this and then not got it. This gravitated only from zooming out to the daily had we known that this is coming to the head and shoulders. So understand that as well as one major aspect, that if you were zooming into anything below the daily and just focusing on this push, you would have not seen the head and shoulders. So if you are someone who does that, understand that's something that could be a small 1% tweak for you. Going into the 4, now that we've committed from the head and shoulders, we can then look for the impulse and correction. So we'll reanalyze that in a minute. Go in here. I would have been looking for something like that. Kind of gives you that running channel vibe, and then the drop off. Yeah, didn't get the full commitment on that. Very interesting behavior though on price for sure. So this would have originally been looking at it like that, where you kind of had this as the 1, 2, the middle section coming up for the 3rd, but then over time you would have probably just evolved and look at it and then seen that as the break, then continuations and so forth. Correction in there. I'll look at that on the 1 in a minute. I can't really see any clear 4-hour structures here. Nothing that really jumps out to me and says this is a sort of, this is a banging 10 out of 10 trade, because that's what I'm looking for. I'm looking for clear sort of areas where I would have been analyzing that meets my trading plan. I can see middle sections and stuff, good trades. I mean, honestly, there's probably stuff that I'm missing right now and I'm not seeing it, but like I said, I'm seeing some similarities already where you have this like subjective first touch, two touch, and then sell off. Anyway, so we'll go with this, and now let's go to the one and start all the way at the top again. So something like this does take a bit of time to analyze, I'll be honest with you. Like, you can't just expect to take a trade of any sort. There could have been a 15 in there, which I'll come back and look at. Let's have a little look over here. Probably another trade in there, but I wouldn't have taken that due to all of this. So yeah, just in case you have any questions, I wouldn't have taken some of these trades, but I am marking on all the trades that I can see as a trade, because like I usually say, there's a lot of stuff to learn from data, and you might not take the trade, but you might learn over time that you would then want to learn how to take the trade. But if you understand it, you might then be able to incorporate it into your trading plan and then take advantage of something like that. So just understand that learning as much as possible is sometimes also very, very good, but at the same time, it might also stunt your growth. So you don't always want to be taking any and every trade. You want to be quite specific and granular with what you want. And over time, I've realized that for myself, that because now I have a particular sort of trading plan and I keep it as a sort of strict sort of, this is how I want to take my trades. It's just one of those where I can't deviate away from that, and because I can't deviate away from it, I'm taking good trades. Genuinely, I'm taking good trades because I'm literally just following a trading plan which is very clear and straightforward. So I think this is pretty much a subjective one as well. Yeah, a lot of these patterns, like I said, you wouldn't be able to know that's the first touch. You would have forecast it similar, closer up to the date you would have known, but looking at a trade like this, you would only have known that this is pretty much the gameplay around about 10 hours before the trade really shaped up into that value area. So you would have understood it earlier as a variation, and that's what would have given you the understanding that that's a good trade, but at the most, it's not always the case. You know, I think a lot of the time, there's a lot of these trades, but we either underanalyze or we overanalyze, and it stops us from growing. So let's have a look at this one, and then you would have maybe had a near miss, and I've noticed this quite a bit. Like, we had these little liquidity areas just above, didn't tap into them when we sold. So very interesting price behaviors. Yep, that's a solid trade there as well. And when you do something like this, honestly, it really opens your eyes to trading possibilities. That was incomplete structure, so I wouldn't even class it as one. You can go off and draw your middle sections and stuff as well if you want to build some better recognition. I can see so many failed structures that would have pretty much met my plan, but then at the same time, it's like, you know, then you ask yourself, like, do I draw that on or do I not? I say draw it on anyway, because then you can actually learn from that and say, okay, well, we had a subjective first touch, we had a second, and then we had a failed third. And then you ask yourself, like, is that a similarity that I'm seeing throughout, or am I under-analyzing or over-analyzing or something? Like, you know, and then you start to learn a little bit more about a pair of characteristics during a sequence. And then we can see that, and this was just a larger push away, which is also very interesting, filled with a lot of choppy price action. So yeah, it's one of those ones where I think over time you would have adjusted and got better at it, but yeah, just gonna see why if I would have cut. Yeah, it's a is that a wick? Yeah, it's a bit of an interesting one because you're kind of in that area. I would say I'll just leave the wick in there as a bit of price. go with it like that. See the angle of this. Yeah, I'm not too happy with that. Keep it a little bit more parallel. Too subjective, way too subjective. We can just see that as a pullback to the head and shoulders, and then this would be your long play. So if you are analyzing that, I would analyze that separately. But for the sake of the video, I'm not going to analyze this because we understood. So personally, I would say that let's just, for the video's sake, you could probably, if you wanted to, you could go off and do the rest of this. But let's look at this as the one sequence to that, and then understand the head and shoulders plate, and we continue to the run. So on here, for example, you wouldn't have been able to see anything on the daily because it is the impulsive run. Then we would have seen here on the 4, if I get a chance. Oh, actually, you know what? Let me replay that back to around about here. Then we can see on the 4 that we had a whole bunch of different patterns forming within here. We had a larger pullback into this area of liquidity. So it was more of a liquidity pool, most probably taking out people from these areas. All of these traders who saw all of this drop off down here, pull back, take them out. Maybe they take profit, of course, or break evens, but then the trade just continues in sequence. So it happens a lot. We tend to see it happen quite a lot, but sometimes these are the real runs. This one here. So we can see over here, and now we can actually just get to a little bit of a more fun part of this. If I can go back, because I clicked on something. Yeah, back over here. Sick. Alright, cool. So we just go to the 1 quickly. I don't think I've got permission for the 15, so yeah, I'm looking at 2015. Oh, I didn't even know. You know, and this is the nice thing about it. When you have a solid strategy, you can go way back in time and you can learn this stuff. So let's have a little look, and now we can actually size up these positions. So 1 hour was the best I could do. With 15, I could have probably got refined. I can already see some trades in some areas, but like I said, this won't be reduced risk due to my trading plan. Probably would have made about 40 just to be safe. That would be my first trade. Second one would have been around about here. Did I have that? Let me zoom in a little bit more and just have a little closer look at this. So yeah, I would have had it something like that. Yeah, trade for me, I could have probably said I would have not taken this. I think this would have been the better one over here, but there's a slight possibility that I could have. I think I wouldn't have taken this trade at all, actually, because of that wick would have put me off. I would have understood it. I would have definitely cut through it. But I need to understand, what is that wicking towards? The 90% roll. Yeah, that would have put me off for sure. Yeah, I wouldn't have touched that. I would have just understood this could go higher, so I wouldn't have taken a trade here. I'll take off this structure anyway. Yeah, I'll take it off because I wouldn't have touched that. Then when I had that push away and we're trading back close to this, I could have then understood that there is this corrective sort of, yeah, subjective. I would have then pretty much wanted to see a break below this. So I think as we got to here, I probably would have been aggressive with my management. Probably if it ran to around about 3.7, yeah, about 3%, I would have walked away with, really and truly. I don't know how aggressive that was, and if that was just news. If it was, hey, it is what it is. At that point, I would have really locked in around about 1. If I didn't catch all of this, then I would have been at break even, and then it would have done all of this. But yeah, about 3%. So let's just say I walked away with about 3% there. A trade in here, I think I would have definitely probably considered something like that, and I would have taken a trade like that. 50 odd pips, still a little bit large. Really and truly, I would have looked for 15-minute refinements within here, but I can't see the 15, so I can't. And yeah, this could have resulted easily in a 1%. Yeah, probably would have been a 1% trade if I had taken that. So probably, yeah, about 1%. I would have taken a 1% on that for sure. Then I would have looked at this one. I wouldn't have taken a trade on that personally. I can see it's still a trade, just wouldn't have taken a trade there. Over here, in hindsight, looking at it on the one, probably still would not have taken a trade on that as well. Over here though, yeah, I would have taken that. I would have sent that after that massive impulse, understood it, would have been a reduced risk for me, probably just around about there, probably taking it, yeah, rough through, call it about 40 again, and it overall pushed down for about 4-ish. Yeah, I would have walked around with about 2%. 2% there. Then we have this sort of push up, understanding that now we're probably gravitating back to fill. That is where my intention would have been after I saw all of this, because you see that wick over here, we tapped into this. Okay, actually, you know what, I probably would have been more aggressive with this and walked away with 3.5. Yeah, 3.5 for sure, just because I would have zoomed out, seen that. With that momentum push up now, we've cleared all of this, we're trading back above. I would have then said, okay, cool, if I see any sort of flags which is validated, I would have looked at this area here. Yeah, that would have been all, I would have been all over this trade right here. Probably would have been right there, yeah. And I would have put protection below this as the possibility, and then under that, so I've got about 23, I would have gone around about 30-ish pips. Yeah, 30 is good. And what was that running around about 3? Oh, I would have been just taken out for a break even. That would have just taken me out, to be honest. Yeah, so that would have been a 1% trade. It's just I'm very systematic with my trading, so when I go back and do this data collection, I can understand that. Then I can't really see anything else. Nothing jumps out. No, I wouldn't have taken no more trades. I think as we got to this point, I definitely wouldn't have taken that sell. Looking at things now, yeah, I would have sent this more as a long. So I would have understood this and why it sold, but I wouldn't have taken it. Then I would have zoomed out again, had a little look at price. Yeah, that's a difficult one for sure, because look at this, right? What happened was you had this wick over here. Oops. We have this momentum, and you had this wick. Price came in, filled this wick, and then sort of correctively squeezed. And you would assume that this could be a larger sort of range, like from here to here, and then you're playing this range. So you wouldn't want to take any shitty trades in there. So yeah, so as soon as we broke below this, then yeah, okay, fine. That would be my next trade for sure, to look short. You'd have to really change your bias at that point and understand what you're trading. Reduce risk. I think I could have taken a risk in there. I probably would have. This is the one. Yeah, probably that would have been my trade. And what was we running here? Nah, it's good. Would have been a break even still. And then I think around about at this point here, I'd be running about 1%, and then around about here 5, so about 3% locked in. Yeah, around about 7% here. What we're trading into. We're not quite there yet, so yeah, I would have had about 5 locked in. Walked around about 5%, just over there. So yeah, that would have been a 5% trade there. Interesting though, because I can't see the losses. I'm trying to look at both sides of things, and I think when you do this data collection, sometimes you don't see your mistakes. You can only see the good trades. So that's why you're only seeing wins at the moment, because I'm looking for winning trades. I'm not looking for trades that I would lose on. Would I have taken this trade? Probably not. It's too subjective on the first touch there. Understandable. Could have seen this as a larger flag, where I would have seen something like that and look at that as one range. But yeah, like I said, there is a trade in there. I mean, yeah, it's just one of those where correctively squeezed up. We tapped into this sort of liquidity area. We then created this, which I think with a little bit more of refinement on the 15, I would have been able to see that a little bit more clear. We don't have that, so I can't see it. Maybe there was a trade in there, possibly, but anyway, regardless, there was this as well, so I could say that reduced risk wouldn't have been tagged anyway. Yeah, so I would have had a cancelled pending order here for sure. Would I have taken the risk? It's possible that the risk entry would have been taken here, and that would have been a quick loss. But I think looking at things in hindsight, you'd be better off just taking the reduced risk. It's only a few pips away, and you'd want to be tagged into something off this because of that. So I think you'd learn that over time. You know, for a sake of what, 30 pips against, call it 5 pips maybe. Nah, you'd probably add a bit extra. Yeah, it would be 30 to 30 anyway. So yeah, you save stuff, because we have to understand that at this point here, this could just travel back up here, create that, and then go. And then because your order was down here, you could then have moved your protection back up here, or you could have opted in for the third touch. So that would have made more sense. Okay, so this one, certainly a trade for me. Reason being is we've cleared that low, and now we're creating continuation. Incompletion there, so this would have been a larger stop for me, probably like 50, I think 60. Fucking hell. Yeah, I'd still take that though, I'm not gonna lie. Like, I'd be happy with that because I understand it. Stop protection would be above, so yeah, 60, 65. Oh man, 15 I would have refined that though for sure and had a better understanding, but it is what it is. And then easily, yeah, I think when I would have been running about 1, came down to about 2. Because it's such a large stop, it's a bit difficult because you can't manage it the same way. Like, your management slightly changes when you have a larger stop. I think I would have taken a break even on this for sure. I think I would have just, poor guy, like I would have either been taken out there or all the way back up here, and it is what it is. Like, I just couldn't, there was nothing I could really do, so let's call that a break even with a long hold. Probably paid some swaps on it as well, who knows, maybe even a small profit. But then we had this internal structure, which let's just say I was taken out here so we can have it clearer. We had this internal structure, which once again you would only be able to see once it committed. You wouldn't have been able to understand that, really being able to understand it. I mean, we are trading below this area, so I wouldn't worry so much about that. So yeah, you could kind of see that as an internal structure. I think after that commitment here, there probably was some trades in there. There was definitely a trade over there. So let's look at it on the 1. Yeah, you could make that out. I actually thought I was on a 1 just now, so yeah, okay. 1, 2, 3. Yeah, I could do that. So we had that internal squeeze as we had this push away. That's a risky one though, fucking hell. But what you'd actually be trading is this with protection above that ray line. Take that away, clear that off, and yeah, you'd be looking at that moving your stop. Let's just quickly put that back on so I have it later. Put this over here, stop protection above 50 pips. Yeah, I would have gone 50 pips, and then I'll just go a little bit closer, and then I'd look at it from over here. Yeah, you wouldn't have really been able to anticipate that early on enough. I think I would have, yeah, I would have seen it like that for sure. So yeah, I would have taken that, understood the risks involved. I'm not worried about that, because if it did come up there, then it is what it is. There was this aspect as well, which then kind of given you that sort of feel, but I felt a little bit more protected at this point. And yeah, so you could have said phase line entry on this would have been better. Same sort of trade anyway, so you know, but let's just say you took this one, 52 pips, pretty much too much, I think maybe even, yeah, call it 50. Yeah, so, oops, we'll just quickly go back to that. So yeah, so probably would have taken a trade here, resulted in just locking in 5, so that would be the first trade in there. Would have not taken that one, and then over here would have been looking at this section. It would have then done this, but I wouldn't have looked at this as the expanding. It would have made me a little bit weary just with this as well, but I'm happy with 5 because overall we were about 7 point something. 5's more than enough. I don't want to be pushing that back because of something possibly could happen. Over here we could understand that we had this and we correctively squeezed towards it. There is room here for this to be a good trade, where we did have this retrace. It's just the only off-putting thing is that wick. So then at that point there, I would have probably opted in for, yeah, roughly around about a 40 odd pip stop loss, call it 50, just to be safe. Locking that in, so risking 1% for the 5 that I have here. Probably would have took that on a reduced risk than I would normally as well, so lower the risk a little bit more, just so that I'm not giving away too much as well. And then I think over here, when you would have been running around about 3, I would have locked in around about 1, which, yeah, overall took me out. Just zoom out to the quick high time frame, just see if we're not trading into anything in particular. No, we're not. We do have this point over here, so this is where I'd be more aggressive with my management, just to make that clear. So I'll mark that on there as we're trading into it. And then as we can see over here, yeah, so we had this, the incompletion of the 1, 2, 3, so I probably would have taken no trade at all in this area. So I'll just remove that. And then over here as well, 2 tops. Yeah, not really a trade for me. And then I think at that point there, that would have been taken out. Over here, running roughly around about 9%. So probably would have had about at least around about yeah, would have walked away with about 7.5 there, 7.44 to be exact. And then here, obviously this did end up dropping off even further and did go for around about 13, but once again I wanted to be more aggressive in this area because of what this could develop into. You know, there's many possibilities at a point like this where something like that could have happened, you know, and it's just understanding that as it is what it is. So yeah, so there was this potential for the trade, just didn't commit, and that would have been the final trade in there where we would have had this sort of internal sort of structure here, but I didn't quite get that third touch, so there was no trade, and I think that would have been it. So throughout this run, if we just add that up quickly and we have a little look at it, we're looking at so call it about 3, oops, what is that, 1%? I think it's 1, looks like 1. Yeah, so 4% in total there. Then we're looking at additional 3.5, 7.5, 8.5, and then plus additional 5, which is not bad, 13, and then a break even. Wow, okay, so you know, 20.5, and then 21.5. So we're looking at a total of 21.5 between this impulsive run here, understanding that we did have the near miss, but then by the time we're down here in this run, you know, you just have to trade what you see, so don't let something small like that put you off. And if we just measure that quickly and just see what the sake of that near miss was, you're looking at something around about 60 pips. So for the sake of 60 pips, you don't want to be set out to not take trades. I get it, like when you have a pullback like this, it puts you off, but then you have to understand, where's my line in the sand? You know, if we're going to continue, we'd have this larger flag and we'd continue to the upside. We had a push down, clear correction, continue to the downside, and then we started our run. There was a lot of missed trades in here as well that I could have taken advantage of, but I didn't have the 15. So alone, utilizing the weekly, daily 4 and 1, mostly the 1 and 4 here, we then was able to make about 20, call it 20 odd %. So if we measure now the period of time where we were looking at this, so really and truly, if we take it from top to bottom of here, we're looking around about 50-day period. So, you know, like I said, if you're in a process of funding assessment, you're looking at 49, yeah, 50-day period. I understand there's an abundance of opportunity, but only by looking for something in particular, you're going to be able to get the most out of the market. So I hope this sort of short video was quite useful for you. I know I did say, or I did mention it was going to be around about 10 minutes. It did drag on a little bit longer, so I do apologize about that. If I did mention that, I'm not too sure. But obviously something like this is very useful, and if you do enjoy looking at videos like this, that you can see some value from it, or you are looking for some guidance on how to learn how to trade and stuff, I can point you in the right direction. Just drop me a message. You can Instagram me. Should be in the link tree below, and yeah, more than happy to post some more videos like this if you liked it. So if you did like this sort of video, and I'm more than happy to make more videos like this, you can drop a comment in the comment section below after video and just say, yeah, sick video, would love to see another one. And yeah, I'm more than happy to post more videos like this, because it's not only educational for you, but it's also educational for me, but I also enjoy it a lot as well. So we can pick some pairs and we can just do sessions like this a lot, and you can get more clarity. Obviously it's not easy to trade like this on a hands-off, and would I have taken all these trades? Yes, all these trades were in my trading plan, so I'm looking for something in particular, whereas somebody else could have taken a lot of trades in here which were in their trading plan. So you just need to understand that all of these trades in here were in my trading plan. I actually missed one trade out actually, and I think I might have said I wouldn't have taken it, but then going back out and zooming out, I do see that yeah, I could have happily taken this for about a 60 odd pip stop loss as well. Running around about 3. When did I run? About 5. So oh, that could have actually still been running. So I think that would have been one taking around about 6-ish% as well on top. Anyway, like I said, I'm going to keep spotting things the more I look at this. So yeah, I urge you to do sort of sessions like this with yourself, man. Like I do a lot of these in the background, and then I collect the data and I store it. But now it's got to the point where I'm no longer collecting this data and putting it somewhere. I'm just building my recognition skills more and more. So it's become something quite fun to do, but like I said, it's not necessary to do it all the time, because I still have a lot of stuff to do. Like I have some video content I'm going to go and watch today to get some more education in. I'm going to then go and review some of my previous trades, do a little bit of ASRing, and then on top of that, I'm going to go and just relax, maybe go do something fun for a bit, and then hopefully just kind of, you know, progress slowly with everything that I'm doing in all different areas. Read a book, work on my mindset, do some rewired, which basically will help me kind of wire myself to think better like a trader, self-imaging and self-awareness. And then basically working with your thought patterns, positive thinking, and so forth. And yeah, loads of things, affirmations. Honestly, it can be very, very fun, and very, very rewarding, of course, as well. So guys, have a great week, and I will catch you guys in the next video. Take care.